Hello and welcome in today's week ahead video. My name is Mohammad Shanti and I will be your host for this video. Central banks action coming in the week ahead, including the US Fed FOMC meeting, the Bank of England, Bank of Japan policy meetings, while flash September PMIs offer all important fresh clues on economic condition, and also the Canadian new government election will be in focus. Starting with the PMIs, some clarification may come from the flash PMIs, which will offer a first glimpse of economic condition in September across the world's largest developed economies. The extent to which supply constraints continue to affect Western economies will be especially in focus in the manufacturing PMIs, providing a key bearing on inflationary pressures, just as the services PMI will be studied for their reflection of how ongoing COVID-19 Delta variant spreads have affected consumer demand into September. As regarding the central bank meetings, starting with the FOMC, a taper announcement is expected following the meeting conclusion, with inflation running well just above the 2%. Our research department sees November being the potential start date for tapering that will run for several months, extending well into 2022. So how will the FOMC meeting will affect the US dollar, stocks market and gold? In the bigger picture, starting with the US dollar, whether we get a formal taper announcement in November, it doesn't matter as much as it matters all time. What matters is that the Fed is years ahead of the European Central Bank and the Bank of Japan in this process. Over time, this central bank divergence should allow US yields to rise faster than their European and Japanese counterparts, making the dollar more attractive against the euro or even the yen, as interest rate differentials widen to its advantage. Therefore, looking at the technicals for the euro-dollar pair, as you can see, there is a bearish momentum at the moment in the daily chart, where the prices are currently standing at the one spot, 0.1781, and the oscillators on the daily chart are pointing to the downside. If you're looking at the RSI, we are seeing the prices are currently just below the 50 mark, while the MACD are giving us a bearish outlook with a bearish crossover just above the zero line, where we could see potential selling pressure happening for the euro dollar. Currently, the pair is standing below moving averages at the levels of 1.1780, and a further bearish momentum, we could see prices all the way to the levels of 1.1664 in the next week meeting. Failure to defeat the levels of 1.1664, we could see prices all the way back to the moving averages at the levels of 1.1818 and then next to the levels of 1.1865. Beyond the US dollar, all this has implication for gold and stocks market too. Gold is inversely related to bond yields and the US dollar. Since gold pays no yield to hold, it becomes less attractive in an environment of rising yields. Likewise, because gold is priced in dollars, it becomes more expensive to buy for foreign investors as the greenback gets stronger. Gold prices has been facing a bearish pressure lately, especially after the softer inflation numbers coming from the US. Technically, we are seeing the gold trading just below moving averages, breaching the important support line of 1781 and currently stands at the level of 1763. Should next week we see a further more clues about the tapering from the FOMC meeting, we could see a negative pressure as rising yields, bond yields, could actually push the precious metal all the way to the levels, first at the levels of 1718 and then next to the levels of 1683. Regarding the stocks market, the FOMC policy meeting effects are not just so straightforward. Less liquidity into the financial system and higher interest rates are theoretically negative for stocks. But then again, stocks tend to perform well when the economy is booming. The example here is the 2015-2019 period when the Fed was raising rates, yet equity market soared. Looking at the Dow Jones Index, you can see the current uptrend is happening where in the short term we're seeing prices stand at the level of 34,645. Trading just below the moving average at the levels of 34,503 could create a new bearish wave to the downside, where the MACD and the RSI are pointing to the downside, which could confirm further bearish pressure. Trading below this level, we could see prices all the way to the levels of 33,153. Failure to see a bearish pressure, we could see prices all the way back to the 35,219. Finally, going to the USDCAD, next week will be an eventful, special with the governmental elections, the loonie will be in focus as Canadians will go to the polls on Monday, September 20, to elect their new government. The outcome is too close to call as the two main contenders are currently running neck and neck in the opinion polls. In the forex market, the ideal scenario for the loonie might be another Trudeau victory, which is the current Prime Minister, because this will allow government spending to remain very generous in the environment of tighter monetary policy as the Bank of Canada intends to raise interest rates next year. Massive government spendings coupled with the raising rates is very powerful cocktail for the currency. In contrast, the Canadian dollar could take a hit if the Prime Minister fails to win, as the probability of spending cuts down the road would be much higher. That could hit the economic growth coming out of the crisis, and a ban on the foreign investors buying houses applies less demand for the currency as well. That being said, there would be less regulatory risk and better chances of tax cuts, so that might negate some of the negative impact, especially with higher oil prices. Either way, whoever wins will only command a minority government according to the opinion polls, so any dramatic policy changes are unlikely. Technically, in the short term, we are seeing the loonie is trading just above moving averages, while the oscillators are still a bit flat but still pointing to the upside. Trading below the levels of 1.2528 could see a bearish pressure on the pair, while targeting the levels of 1.2264. That's for the long term. Going to the short term, if you look at the current technical setup, we are seeing that the loonie is trading within a range, and the main support line stands at the 1.2590. At the feet of that level, we could see prices all the way back to the levels of 1.2495.